From our studios in Scottsdale, Arizona, this is Retirement News Online. So after battling 2022's inflation shock and the rapid rate hikes that followed, markets have enjoyed a stretch of calm and growth. Now, let's talk about now. The question, whether 2026 could bring another unexpected flurry of volatility. And joining me is Nate Hines with High Point Retirement in Scottsdale, Arizona. And Nate, there's I guess a bit of volatility happening right now. We've seen the markets rise and fall, but I think what a lot of people are wondering about, maybe we'll just start with inflation, which kind of affects everything. It's now down to 2.75. Is that what we're going to be, is that the floor we're looking at going forward? Is that what we expect now?
Do I think interest rates are going back to near 0% like they were during COVID anytime soon? Most likely not, but inflation has calmed down. But the analogy I like to use, Scott, is if you think about a bonfire, right? Like you put the fire out at night before you go to bed, there might be some embers in there that you haven't quite put out with the water that you need to. And that's kind of how I look at inflation right now. The fire has stopped, but there's still some things, the tariffs, et cetera. You go to the grocery store, the gas station, things still cost a lot of money. There's still some underlying concern there that we got to be aware of as we kind of move into 2026.
And it seems like the Fed has set a 4% benchmark on interest rates now. What is your thought on that, and how is that going to change going forward?
Yeah, so if you look at the futures markets, they're pricing in somewhere between 1 and 3 rate cuts for 2026. So the most conservative estimate would be just 1 rate cut all of next year. To put that in perspective, we got 3 this year. So they're definitely slowing down. But, ever since 2009, they have been there whenever the markets got a little topsy-turvy or the economy needed stimulated. So until I see otherwise, it's been about 18 years now where they've had our back. So 1 to 3 rate cuts, but if something unexpected happened, it could be more.
Looking at the S&P, so good growth, obviously. Mag 7 and AI kind of driving all that.
Sure.
Not uncommon. What's the broader market look like? Do you think that there is still room to run? Because everything appears, there's I think more bears out there than bulls right now, that we might be in a year-long correction or something like that, where it might pull back a little bit. What do you think?
Yeah, I think there's 3 different things at play. The first one is kind of consumer sentiment. So what does the average American feel like when they go to the grocery store, when they try to take their family out to eat? Well, how they feel right now is things cost a lot, right? So consumer sentiment is actually pretty negative right now. The second item we have is the underlying economy. That is low to slow growth for 2026, most likely. So not a recession, not the nasty R word, right? But not an economic boom either. And then the third one's the market. Like you said, past 3 years especially, that's been propped up by the Magnificent Seven. The Magnificent Seven was actually only 5 stocks this year. It's the most top-heavy the market's ever been. So what I think might happen next year is a broadening out. So instead of 7 stocks in the S&P 500 contributing the majority of the gains, you're going to see places to go and companies to invest in where maybe they haven't had the huge run-up over the past 3 to 5 years like these other companies have. And that's what we're trying to do and position our clients' portfolios to try and take advantage of that next year.
And you spend your time as chief financial officer in this area too. So what do you tell clients now? So clients are susceptible to all kinds of social media, all the water cooler talk from their friends and their family. Intuitively you would say maybe now is the time to take some chips off the table and kind of maybe do something else. But what do you think? What do you tell somebody?
Yeah, we've already seen it. November and December of this year, we've seen people taking profits. We've seen some volatility back in the markets. So people are definitely doing that. It's dependent on everyone's situation. Some of our clients have a high risk tolerance. Some of them have very little risk tolerance, and depending on if their income's secured or not, et cetera, et cetera. So everyone's portfolio is unique at our firm. We literally tailor make them for every household's unique situation. But yeah, taking profits in general right now with the market literally at all-time highs, it's not the worst idea in the world.
Yeah. unless it starts to rebound and can keep going higher and higher and higher, and that's always the question.
Sure, and we're cautiously optimistic moving forward right now today. We have to be prepared for the next downturn, since there hasn't been a real one in about 18 years now. We're at the tail end of the longest and largest bull market in American history. So it would be foolish to ignore that fact, right? But at the same time, if we get some good growth in the market again in 2026, we don't want our clients to miss out on that.
Let's go back to April. Market dumps 3,000 points at the opening bell.
Yep.
The first thought would be, get me out of here. And then you miss out on the rebound that happened very quickly after that. So how do you handle all that part?
Yeah, two things there. One, in the initial portfolio constructions, we're gonna set some guardrails in place so that we don't have to then react to whatever the next unexpected volatility pain point becomes, right? We're already set up for it. And the second thing, we're uniquely positioned. I traded options professionally for over a decade. I worked in London, New York, and Chicago, literally making money in the markets doing that for a professional financial company. So I take that same approach and that knowledge and background to our clients' portfolios.
My guest has been Nate Hines with High Point Retirement right here in the People's Republic of Scottsdale, Arizona. Nate, thank you so much. And this is Retirement News Online. You can find more at retirementnewsonline.com.